Welcome to This Explainer. Today, we're popping the hood on basic business finance. We really need to figure out exactly how financial literacy acts as the ultimate survival engine for, well, any venture. Whether you're scaling a massive enterprise or just, tightening up your current operations, mastering these foundational mechanics is absolutely essential to keeping the engine running. So imagine opening your absolute dream business. You pour your heart, your soul, and countless late nights into it. You check the books, and man, the registers are just constantly ringing. You're hitting tens of thousands in sales every single month, and the cash register literally looks like it's overflowing. You feel like you've completely conquered the market. But then, tragically, that exact same business goes bankrupt.
It sounds completely impossible, right? Like, no way. How does a business with money just pouring through the front door end up putting up a close forever sign? Well, this terrifying paradox actually happens every single day out in the real world. And it almost always comes down to a fundamental misunderstanding of the underlying financial mechanics at play.
Let's define exactly what we're dealing with here. Business finance is simply the way a company earns, spends, manages, and ultimately grows its money. Think of it as the financial engine of your enterprise. I mean, you can have a beautiful vehicle, a truly world-changing business idea, but without a functional, well-maintained engine under the hood, you're literally not going anywhere.
Section 1. Revenue versus profit. It is incredibly easy to conflate these two terms, but they represent entirely different things. Revenue is the raw total. It's all the money received from selling your products or services, your top line. Profit, on the other hand, is strictly what's left over after you've paid all your expenses. It's what actually stays in the house. To put this paradox into perspective, let's say you bring in a fantastic $10,000 in revenue. You're probably popping champagne, celebrating that milestone. But it costs you $7,000 in expenses, things like raw materials, rent, payroll, just to make that happen. So your actual profit? It's that much smaller, $3,000 slice at the very end of the equation. The big takeaway here is that a business can look absolutely amazing above the surface, with high revenue on paper, but actually be barely scraping by on very little profit underneath. It's kind of like an iceberg, right? It's what's hidden below the surface, those expenses secretly draining the profit, that silently marches a company straight toward catastrophic failure. Section 2. The cash flow's secret. This leads us to a wildly counterintuitive truth, and honestly, it's one that shocks even seasoned professionals. A completely profitable business can still run entirely out of money. Just let that sink in for a second. You can have a perfectly positive profit margin, celebrate a massive quarter, and still find your bank account completely empty when the bills actually arrive. So why on earth does this happen? If the business is supposedly making a profit and the math checks out perfectly at the end of the month, where is all the actual cash going? It feels like a magic trick, but the reality is purely structural. It all comes down to cash flow. That's the strict measurement of exactly how and when money moves in and out of a business. Timing is absolutely everything here. You might make a massive sale and be technically profitable, but if your clients pay you in 60 days and your payroll is due today, yeah, you're in deep trouble. You've got profit on paper, but zero cash in hand to keep the lights on. This timing trap is exactly why financial experts across the globe operate by one golden rule: cash is king. Profit is incredibly important for long-term viability, absolutely. But without actual cash flowing at the right times, profitability alone won't save you from having to abruptly shut down operations.
Section 3. Assets and liabilities.
On one side of the ledger, we have assets. That's quite simply what your business actually owns outright. On the flip side, we have liabilities, which represent the debts and financial obligations your business owes to others. It's the fundamental push and pull of business wealth that defines your true net worth. Let's break down those assets a bit further. These are tangible, valuable items that fuel your operations. We're talking about the actual cash sitting securely in the bank, the physical equipment used to create your product, current warehouse inventory waiting to be sold, or even the commercial real estate you operate from. These hold lasting, measurable value. Liabilities, however, act as the financial anchors. These are the outstanding business loans you took out to get the venture started, or that mounting pile of unpaid vendor bills and invoices just sitting on your desk. Every single dollar in this column is a dollar that belongs to someone else, constantly pulling at your resources.
Bringing this all together, the key to avoiding that terrifying bankruptcy paradox is a simple but strict balancing act. You absolutely must build up valuable assets while ensuring your liabilities remain completely manageable. If what you owe ever drastically outweighs what you own, your entire operation is placed at massive, unsustainable risk. Section 4. Why money management matters. Understanding finance empowers you with a vital blueprint. Grasping these foundational basics allows you to make incredibly smart, data-driven decisions. You can actively control your spending, naturally increase profits by widening the gap between revenue and expenses, strategically avoid crippling debt, and plan for sustainable long-term future growth. Ultimately, it becomes incredibly clear that finance isn't just about staring at abstract math equations or boring endless spreadsheets. It's the very foundation of making better, more effective business decisions. It gives you the necessary clarity to effectively steer the ship through turbulent economic waters. The world's most successful entrepreneurs know this secret deeply. Having a genuinely great product just isn't enough on its own. They must absolutely understand money to survive. You could literally have the best invention of the 21st century, but without real financial literacy, the market's natural turbulence will eventually pull you under. Because in business, it all boils down to this fundamental truth. The better you manage the money moving in and out, the faster and safer your business will grow. Financial knowledge isn't some tedious barrier to your success. It's a powerful, undeniable accelerator. Having solved the mystery of the bankruptcy paradox today, I want to leave you with one final thought. If cash is truly king, is your current business model building a resilient kingdom or just a fragile house of cards? The tools are right in front of you. Start applying them, watch your cash flow, and ensure your survival. Thanks for joining me on this explainer, and I'll catch you next time.